Hi guys, welcome to the Daily Charts. My name is Michael and I'm an analyst here on the channel. Let's discuss in this video anywhere between 15 and 20 minutes the concept of professional day trading. And what do we mean, exactly what do I mean when I say professional day trading? So there is this concept that day trading is a hoax. It's not a normal job. It's like you can come here at 9:30 in the morning when the market's open. In 20 minutes you are up a couple of $1,000. You are at the beach drinking pina coladas. That's not real day trading. That's make-believe and BS. Okay, day trading is a job like any other job. And in order to succeed in day trading, you need to have a business plan. You need to have a business approach. And if you have a business approach, you can succeed. And day trading is basically a one-man show. I mean, there are, I know from experience that there are a couple of traders that can trade together, but overall, most of the day traders are one-man shows. So again, you are like a dentist, a driver, a pilot. It's you versus the market, as much as the driver is him versus the road, or the dentist versus the patient. So the idea here is that you need to excel in what you're doing. If you excel in what you're doing, you can succeed and make a lot of money. If you don't excel in what you're doing and you treat it like a hobby, like a BS business, the results are going to be BS. So what do I mean when treating it like a professional business? First of all, you need to invest capital. I'm going to say the capital in this example is $20,000, which is not a lot of capital, but keep in mind that when you're trading with a US broker, the capital is actually 4 times as much, so it's already $80,000. And don't worry, I'm not talking about leverage or anything like that. Okay, so you have the capital. In order to proceed, you need to have the capital, and now you need to have the knowledge. And let's look at the business approach. So if you are a business, you need to have the capital, the inputs, the work, and the output. So this is the process. So first of all, you need the capital. Then you need to learn the process, have the inputs, and deliver the goods, which is basically the profits. So what are basically our inputs? Our inputs is basically a list of stocks. In this example, this is today's Monday, and the time is, you can see, nearly 1 in the afternoon. And I have on my list, according to a search, longs. Here you can, the name of the list is greens. So I have a bunch of stocks here. The number is 12, and some of them are over 10% in the money. Others are 4%. And again, out of this list, my mission is to take long trades and profit out of them. And if the intraday trend is down, maybe I can short them. So it's not like if the stock is up 50%, I need to buy it, or if it's down, up 7%, it's only a long. So I can work both sides of the market. But the idea here is that I'm using these inputs, and now it's let's round things up. It's 1 p.m. I will work until 4 p.m. Okay, so let me give you an example. Let's take a look at one out of these stocks. Let's take a look at QUBT at random. So this is the chart of QUBT in as you can see, the 3-minute bars. So the stock gapped up, and it's moving as you can see, up and down. To me, it doesn't have any trend. I don't see anything interesting. I'm not going to trade it. Let's move on. Let's look at TERN for pharmaceuticals. Okay, now we're talking. So the stock did not gap up, but it has a clear uptrend. Okay, so now my business is to try and find an entry point here. Obviously now it's at highs of the day, so I'm not going to trade it. But let's say I'm looking at this stock and I'm assuming an uptrend. Maybe I can find an entry point. I'm just pointing at a round number. Let's call it 24. Let's say I enter the trade at 24. Keep in mind that the strategy is, if I'm entering at 24, I need to trade it with a 1% risk. So $24, 1% is 24 cents. I need a stop loss to be at least to the most 23.75. As you can see, it doesn't fit the strategy. Okay, I cannot trade it at 24. I will maybe need to wait for a pullback, maybe to the VWAP, maybe some other pullback. So again, here's another example, another stock where I cannot make a trade. Let's move to another stock, in this case NBI. Let's look at the CLF. Okay, so CLF, it's a $12 stock. It started the trading day with a move higher, then it basically based, and now I'm talking about an entry at 11, and the stop loss will be 10 cents. 10 cents is 1%, so I'm taking the trade long here at 11, $20,000, that's roughly 2,000 shares, and my aim is 3% at least. So the stock moves up nearly 4% and pulls back. Let's say I did not take my 3% and I'm still waiting with the stop loss at the entry or at my stop loss. But basically you catch the drift. The idea here is that I want to enter the trade with the 1% of risk and then take the trade maybe to 11.50, and if I'm lucky, by the end of the trading day it's going to be at 11.80, or worst case scenario, it's coming back to the entry 11.10, and I will stop out either at my entry or at my stop loss. So the business is not, I'm not dependent of any one trade. I can trade 5 positions per day or 15 positions per day under the constraint, and this is super important, not to lose more than 1% per trade, and try to make anywhere between 3% and sometimes 10% per trade. Depends on the market, depends on lots of factors. And the idea here is that if you are in a trade and you enter the trade, let's say at 11:10, stay in the trade until 4 p.m. Maybe you get a surprise that at 4 p.m. this one is going to be at 11.80. Worst case scenario is either you lose 1% or it comes back to the entry, and that's the end of the trade. And of course, this is the list of the longs. I have also the list, let me show you, of the red stocks. Right, let's go to red. And on the list of the red stocks, I have here, as you can see, seven stocks. I'm not going to discuss how I can add it to this list, but let's take a look, for example, at CSIQ, one of the stocks that are available to trade here. And as you can see, the stock clearly gapped down. And now I'm looking for a trade in CSIQ. Maybe I can short it at 26.60. Maybe I can short it here again. Maybe I can use and again, in this case, the stop loss will be 30 cents. So if I'm shorting at 29.60 and the stop loss is 29.90 or at the VWAP pretty much, I'm good with that 1% of risk. And all I want is this stock to break under the lows and deliver plus 3% or more. And again, it doesn't mean when the stock reaches 3%, I'm not closing the trade. Basically what I'm doing is moving my stop loss to the entry and waiting. And some of the trades will come back and stop me at the entry, and some of the trades will go down 6%, maybe 8%. And overall, again, it's all about your risk tolerance. I cannot dictate how to manage the trades, but the idea here is that if you have a $20,000 position and you can gather 3 trades of 3% and one of 2%, that's all over. If I add them up, 4 trades, a gain of 11%. That's more than $2,200. Actually, it's exactly $2,200. And you have 4 losses, which is in this case $800, because each loss is 1% on a $20,000 position. So you subtract 220 minus 800. That's $1,400. So are you happy to end up the trading day with a $1,400 win? If you're not happy, then you need to increase your capital to $30,000, maybe $40,000. if you're happy, you know, I think most of the traders that are looking at this as a business would love to work 6 hours, deliver 1400. Again, did I say something that's out of the ordinary? I said on average 3% per position. Keep in mind, we're trading stocks in 2025. There are stocks on the list that are down 13%, and there are stocks that are up 25%. I'm not talking about a $30 intraday winner or $12, sorry, 12% intraday winner or a 30% intraday winner. I'm talking about very, very methodical, systematic approach, like a business, or basically talking about working like a shop where you deliver 3 to 5 to 8, whatever the market gives you, percent winners per position. And the idea here is, with experience, you can first of all leverage your position from 20,000 to 30,000, and then if you're successful to 40,000. I mean, a $40,000 position in the U.S. equity markets in 2025 is not a big position. I don't want to say it's a minuscule position, but it's definitely not a big position. And the idea here is that you can outgrow or grow with your experience. And if you're in the first 6 months trade $20,000 and you're successful, after 3 months you go to 25, after another 3 months to 30, after another 3 months to 35, and so on. So this approach is scalable, doable, manageable, as long as you are doing the right thing, and the right thing is finding the right entry point under this super important constraint that you don't lose more than 1% per trade. If you start losing instead of 1%, 2%, that's not basically losing 1% more. It's losing basically 100% more. Okay, so that's the bottom line. So don't make this mistake. I'm going to lose 2% or 1%. It doesn't matter. It's only 1%. No, it's 100% more. And this 100% more is going to eat into your profits and turn your business red. I have the experience. I can tell you that. So the idea here, you work 6.5 hours per day. You deliver on your position. Let's say for this example, I said it's 20,000 K. You deliver 8% per day, 7% per day. Maybe you lose one day 4%, and the day after you deliver 12%. But the idea here is that it's this business is teachable, scalable, doable. All the benefits that you can get from a one-man show. Okay, guys, I hope it was clear enough. We are basically at your service. If you have any questions, use our videos. If you want to take the class with us, we'll gladly accommodate you. We have 6 hours, $1,500 seminar, one-on-one. So any questions about this program or other basically other business ideas that you have regarding to day trading and that we can help you with, it's I think it's a very cost effective, it's a very one-on-one systematic approach, and the idea here is that we are here trying to use our experience to help you become profitable. It doesn't mean that it's going to be very easy. It's not easy. Okay, none of the successful businesses are easy, but it's a systematic approach that you can learn it very, very fast, adapt it, and if you have the personal experience in trading, you know that managing losses is the most important thing, and the other part of the business is basically very, very easy to overcome. Thanks for watching. Do like and subscribe. We'd like to hear from you. Thanks again for watching, and we hope to see you either here on the channel or in one of our mentorships.